The price of gold has rallied quite noticeably over the span of the last 6 months, linked obviously to COVID-19, but it's worth spending a moment just thinking about some of the underlying factors and considerations that are ultimately pushing the price of gold higher. And the most obvious initial force was simply risk aversion. And so when risk aversion goes up, often investors flood to the perceived safety of gold. But what's interesting about that is we don't have investors right now in an overly risk-averse positioning. Investors in general have embraced things like stocks over the last 6 months. And so that argument in support of gold has arguably faded. That's no longer a particularly compelling one. However, there are several other reasons why gold is nevertheless arguably justified in being fairly elevated compared to the historical norm. And so one would simply be that inflation expectations are now starting to edge higher. And even if you're skeptical that inflation will be high, there's a risk. The risk of high inflation is higher than usual, whether it's your base case or not. And supporting that, of course, central banks have printed a lot of money. Public debt loads are now quite high. Central banks, the Fed in the US at least, is now targeting an average inflation rate instead of a specific number, and that might sound minor, but it does argue for more inflation over the next few years. And so those sorts of thoughts have created enthusiasm for gold, an asset that historically has fared well during higher inflation environments. And then keep in mind as well, gold can serve as a substitute for bonds in some people's portfolios. And so as bond yields have gotten ever lower, the coupon that one is missing by investing in gold has diminished. And simultaneously, we can say that were there to be a future recession or were there to be a future crisis, there are some questions whether bond yields could fall all that much further given how close to zero they are. And so would they actually provide that hedge during a downturn? Whereas the thinking is that perhaps gold could fairly easily continue to rise. There's no magic number that insists it can't substantially exceed $2,000 in a crisis, as an example. And maybe the last factor that has been supporting gold is US dollar weakness. And so some of that is just mechanical. As the US dollar goes down, foreigners aren't paying any more for gold. It just looks more in US dollar terms. But also the idea that as the US dollar has lost some of its luster and maybe even lost a little bit of its reserve currency status, some argue that maybe gold could pick up a little bit of that reserve currency status. I'm not sure I agree with all of those arguments, but I think several of them do hold. And so gold may continue to perform over the next little while. But let's keep in mind from a long-term perspective, as with almost all real assets, the real return tends to be fairly close to zero. It's hard to get rich on gold over the long run, though of course it can swing substantially in the short run, and it's been a winning bet over the last several months at a minimum.